Microsoft announced their second quarter 2024 earnings on January 30th. Revenues were better than expected by nearly $1 billion, reaching $62 billion, up almost 18%. Gross margins were 68%. Operating income was up over 32% to $27 billion, with the bottom line earning $21.9 billion, up 33% year over year. Microsoft's market capitalization now stands at over $3 trillion. We can see on the quarterly bar chart that revenue has been growing every quarter since Q1 2023, growing nearly 3%. Gross profit has been growing at the same clip of 3%, while operating profit and net income slightly faster at near 3.5%, peaking last quarter in Q1. Looking at the segment revenue, growth has been coming from all parts of Microsoft's business. Intelligent Cloud is a standout revenue generator, growing 4% to $25.9 billion. Next was the Productivity and Business Process line, closing the quarter at $19.3 billion and growing 2.5%. The More Personal Computing segment grew 24% quarter over quarter and finished the quarter at $17.9 billion. Revenue here has been growing at 1.85%. Let's look at the ratios. Shares outstanding were slightly lower by 5 million. Earnings per share was $2.93, up 33% year over year. Sales per share boosted to $8.3, up nearly 18%. Cash per share was $2.23, up 10%. But if we look at the quarter over quarter data, it is down 78%. Microsoft used about $60 billion in cash to buy Activision. Book value jumped 30% to $31.91. The PE is 37.22, where the S&P is only 26.9. PE growth is 1.12. Leverage ratios look good at only 0.1 for debt and 0.19 for debt to equity. Interest coverage at 53 times is fine. Liquidity ratios all looking good, with the current at 1.22, the quick at 1.02, and the cash at 0.14. Return on assets shows 17.5%, and return on equity was 34.6%. Return on capital employed was 7.7%, while return on invested capital was 5.25%. Cash flows look good, with operating cash flow at $18.9 billion. Investing outflow was $10.1 billion. Financing outflows jumped to nearly $72 billion, primarily due to the Activision acquisition. Microsoft ended the quarter with $17.3 billion in free cash flow. They paid a 75-cent dividend, yielding just 0.73% and growing 10% year over year. Microsoft has an enterprise value just over $3 trillion. That means they trade at a 12.5 times revenue and 170 times free cash flow multiple. Market cap to net income is a 35 multiple. Guidance revenue for Q3 is expected to come in 2.5% lower at around $60.5 billion. The productivity and segment process segments will see moderating growth, with the more personal computing business contracting. Based on the guidance, we came up with $2.78 per share using midpoint data, which gave us a forward PE of 36.12. If we look at the guidance at the segment level, more personal computing, in yellow, is expected to decline 12% quarter over quarter, but grew by 24% from the previous quarter. This segment carries the new Activision business. It seems that they held back sales in Q1 and then front-loaded Q2 revenue in this segment to produce these record revenue results. Key takeaways from Q2 earnings report is that the growth is coming from all business segments, margins are good, and there's good cash flow. On the con side, we think the PE ratio is too high, being 10 points over the S&P 500. Q3 guidance was lower after 6 consecutive quarters of revenue growth. We give Microsoft a sell rating. We think the shares are expensive at these levels, and we don't think the artificial intelligence boom will sustain these prices in the short term. We have no exposure to this company. Like and subscribe.